It's time to have that commodity conversation. What's interesting is we're mirroring the start of 2026 when it comes to commodities as it was in 2025. The gains have started to flow in yet again when it comes to gold, silver, platinum. Copper, the expectation is also very high from India Inc. that the kind of rally copper could see from here on. Let's get in Kunal Shah, Head Commodities Research at Nirmal. Kunal, welcome to the show. And wishing you a happy new year as well. My question to you is the kind of start that we've seen for the commodities universe as a whole, from base metals to precious metals, maybe ferrous, non-ferrous. It seems there is no stopping after that mild correction that we saw towards the end of the year as well. Let's break it up. Let's start with gold and silver.
I think gold and silver in out of these two commodities, gold looks much better for the year 2026 because the gold silver ratio, which was 105 during the second half of 2025. So I think in the month of April 2025, it was 105. Now that has come down to 55. So I foresee from here silver should not outperform and gold should. So we are slightly positive on gold. We are not very bullish, or neither we are advising to increase allocation at these level, but we feel that the fundamental for gold are still bullish for the year 2026. There are a lot of uncertainties on the monetary front, on the fiscal front, in the Western central bankers. People are still want to be in precious metal because there is a fear that dollar index can decline quite sharply. Federal Reserve has started to expand its balance sheet again, and that's the reason why we are seeing all asset class rising together. Like you were saying just before this segment started, equities are on the verge of making new highs. Again, S&P 500, Nasdaq, Dow Jones, all of these indices are also moving up. So the Federal Reserve has started to expand its balance sheet, and interest rates are likely to go down. So the money is losing value, and that's why commodities you should continue to remain invested in, even though there can be a volatility about of profit taking, whatever it comes. But commodity on a larger front will still continue to remain one of the most favored asset class to be in a scenario, because the paper currencies are likely to lose their value, and hence commodities should really appreciate going forward. So your wealth will be protected if you are in commodities. That is the overall take. So silver, we are expecting 15 to 20% upside conservatively, and gold, we expect to give you return of 10 to 18% during the year 2026. And return expectation is tapered down, but the outlook is still bullish.
Okay, outlook is bullish, return expectation could be tapered down. Kunal, how will factors like, say, your global economic growth, inflation dynamics, the trajectory when it comes to the US dollar and interest rates influence this commodity prices? Because the commodity super cycle that everyone is talking about, is this early bull market expected to continue then in 2026? I know we are taming down expectations, but overall, if you have to look at the macroeconomic factors, what could be the risks?
Okay, so in 2007-8, we used to really keenly track the demand and supply, and we used to determine the outlook of commodities. I think all those old traditional theories are no longer working. Right now, the markets are behaving, and the commodity prices are moving up because the investors across the globe have started to take this asset class as more of a strategic asset class. So from globalization, we are moving towards multipolar world, and it seems that from globalized, we are going backwards. So that's the reason why everyone, whoever possesses the commodity. So for example, if India has a power consumption and the power demand, and AI data center boom is going to take place, we'll need more power and more copper to transmit that power. So price is not important. If we don't have copper, then it's going to be a big problem. So right now there is a rush to procure these commodities because the multipolar world continue to remain there. The US tariffs have caused a lot of disturbance in the globalization trend, which has been going on from last 20-25 years. So I think it's more of a strategic asset class rather than just the normal demand and supply. So even if the demand of some of the commodities may remain subdued, I mean, most of the industrial metals, the demand growth in China is 1 to 2%. But in spite of that, we are seeing commodity prices have shot up by 35 to 40%. So the traditional demand theory doesn't work. You have to view commodity as more of a strategic asset class, and hence you should remain in it.
What about energy? With the supply growth currently outpacing demand, with the oil surplus, which is probably deepening, what is your forecast when it comes to Brent crude and WTI in 2026?
I think oil prices are going to move up in the year 2026. It's a completely contrary view, which I have. The main reason is anything below $55 in WTI is going to cause a lot of the shale oil producers to to cut off their production. So I think the production is going to go down going forward. Permian Basin, which remains the key basin, where the oil supply growth used to come. I think this basin is showing signs of exhaustion. Number three, China and US likely to build their strategic petroleum reserve if oil goes below $55. And from last 2 years, in spite of the fact that the EV revolution is going on,
Okay, I think, we've just lost
so
Kunal Shah's feed, and we will try repatching him again as well. I think he's back. Yes, Kunal.
So, oil demand from last 2 years is growing at 1 million barrels per day. Okay, which is still a good growth considering there is a EV revolution going on in the world. So, I think even if this year, if the demand growth is 1 million barrels and the supply side starts shrinking, I think oil prices should move up to 65 to $70 per barrel. So it's a complete contrarian call right now, and I'm positive, I'm bullish on oil, and I think this year oil can deliver you 10 to 15% return on a conservative basis.
Okay, so that's with regards to oil as well. Kunal, my last question is running slightly short of time, but in terms of base metals, despite the slowdown that we're seeing in the Chinese property sector, the investments in renewable energy and infrastructure as well, do you think that could affect the stability from a longer term perspective when it comes to copper and aluminium?
I think, like I just said, it's a strategic metals. And right now, what China is doing is China is cutting the smelting capacity of these metals. Okay. So China is tapering down the capacity of copper, aluminum by 10%, 15%. And the concentrate market is already in deficit. There is a tightness in the concentrate market. The quality ores are very difficult to find in case of copper. So, even though there was a slowdown in Chinese property market, these two reasons, and like I said, strategic asset class, these are the reasons why metals are doing well. And I believe that copper will be the new gold for the year 2026. I'm expecting a humongous upside in copper prices. Already they have rallied by 30, 35%. From here also, if they rally by another 20 to 25%, I will not be surprised. I'm very, very bullish on copper. The tightness in the concentrate market and expectation of cut down in the refining capacity. The treatment and the refining charges are at zero level in China. So I believe that the supply of refined copper is going to be a big problem going forward 6 months down the line. In fact, in India, on MCX, copper prices are trading 110 rupees per kg above than LME prices. So there is a tightness in the physical market, and I think that is going to drive copper prices the way silver and gold rallied in 2025. That's going to be the same case for copper in 2026.